Let's now start with illustration number 1. Analyze the effect of each transaction on assets and liabilities and show that both the sides of accounting equation, asset is equal to liabilities plus capital, remains equal. Okay, assets is equal to liabilities plus capital, both are equal. So in the liability side, we have capital and liability. Capital is nothing but amount payable to the owner by the business. Liability is nothing but the amount payable to the third party, outsiders. So I put the capital and liability in the left hand side. In the text it is worked the other way. First assets, then liability and capital. So either way you can work out, so no need to worry about that. Always remember that the capital plus liability should be equal to the summation of all the assets. All the assets. This will be the asset side. I'm not sure what are the kinds of assets exist currently. I'll proceed one after one and I'll just start post other things also simultaneously. Right. Now asset. Asset. The first transaction introduced 8 lakhs as cash and 50,000 by stock. So two assets are now coming to the business. One is cash, another one is stock. Two assets are coming to the business. One is cash, another one is stock. Add up that. If you are being an accountant, write it down what are the assets you have. So cash comes in as well as stock comes in. Not only that, from whom it is receiving. It is received, whether it is from the owner or the third party. If it is from the owner, then it is named as capital. So as per the first transaction, we received cash. We received cash, one of the asset, and stock. The goods is otherwise named as stock here. Goods is named as stock here. This will be the asset side. Right. So we received 800,000 cash. 800,000 cash. Okay. Not only 800,000 rupees worth the cash, stock also we received 50,000 rupees worth. These two given by the owner, so I am going to consider the owner is also being a creditor here, 850 rupees. Is that okay? Values are posted in thousands. 3 zeros are omitted here. By default, you can understand. 800,000, 50,000, that's how you can understand. 850 capital. 850 capital. Cross verify whether the asset side is matching with the liability side or not. Asset side is matching in the credit side or not. So this will be the liability side. Yeah, of course, matching. 850 and 850. Let's go for the second transaction. Purchased plant for rupees 3 lakhs by paying 15,000 in cash and balance at the later date. 3 lakhs worth plant and machinery purchased, so asset comes in. So we get one more asset worth rupees 3 lakhs. So I am going to introduce one more column here. So plant and machinery. The value of the plant and machinery here being 300,000. And for that I have made a payment of only 15,000 because of the reason my cash box showing a decreased value by 15. So 50 minus 15, this is only 35,000. 35,000. Is that okay? 35,000. And balance 285 will be payable later. Then later means automatically the party from whom we have purchased will be my creditor, or I am liable to him. So in liability side, I will put that value. So second transaction, 285 rupees is payable to the third party or supplier. If I purchase the goods and close the payment for that, then you no need to worry about the party. But if I purchase but I have not made any payment, then you have to keep that party's name in your mind as a liable. So he is being the creditor for you. Rest of the other account remains the same. Capital being 850, liability 285, cash being 800. Cross verify whether both the sides are matching. So here 1135 in total of the liability side. In the asset side also the total being 1135. So it's matching, isn't it? Matching. The accounting equation remains constant. Okay. Let's go for the third transaction here. Third transaction. As per the third transaction, deposited 6 lakhs into the bank. So now I deposited 600,000 rupees in the bank, means a new account comes, new asset comes, which is nothing but the bank. So I open the bank account here, another one extra column for bank. Now the bank balance increases by 600. That payment is made by what? Cash. We have cash balance of 800 rupees. Because of depositing in the bank balance is increasing by 600. This cash balance will be reducing by 600. So 200 here. Remaining, see, apart from these things, other account remains the same. So capital remains 850. Liability remains 285. And stock remains 50, no? Yeah, 50. The stock being 50, the earlier case, I put that value being 35. No, see, I have to subtract from the cash. I missed to subtract from the, okay. So I stand corrected. The advance amount paid for the building, plant and machinery being 15 should be subtracted from the cash. So I stand corrected. So cash balance is subtracted to that extent. 800 minus 15. 800 minus 15, how much? 785. Yeah, of course, stock remains same. I just misunderstood. Right. From the 785, 600 rupees deposited to the bank. So now the cash balance is 185. No change in stock, that remains the same. And plant and machinery are also same. Cross verify whether the total is same or not. Hope the total is same. 1135 in both the side. 1135 in both the side. Correct me if I am making any calculations error here. Right. Let's now go for the fourth one. Purchased office furniture for rupees 1 lakh and made payment by check. So we now get one extra furniture here. Asset, that new asset comes in. Furniture. Further, the payment is made by check rupees 1 lakh. So bank balance will decrease. In the fourth transaction, furniture increases by 100. Your bank balance already we have 600. From there we have made a payment of 100. So now the bank balance is only 500. Apart from this, the other accounts remain the same at the same value earlier this transaction. So cash 185, stock 50, plant and machinery 300, bank 500 and furniture 100. I just subtract, means I just erase this. Okay. Fourth one is over. Fifth one, purchased goods worth rupees 80 for cash and 35,000 in credit. The overall purchases being 115,000 rupees. Overall purchases being 115. 80,000 rupees worth of goods purchased by paying cash. Another 35,000 rupees worth of goods purchased in credit. So the stock increases by 115. Now in the fifth transaction, cash increases by 115. So 185 plus, already we have 50 rupees. With that 115 should be addable. If I add 115 with 50, now the stock balance is how much? 165. Am I right? Yes or no? 165 is the stock balance. Then for that we have made a payment of 80. So cash balance will be subtracted by 80. So here now it is 105. Another 35 remains pending. Then I am liable to pay outsider. So it will be addable with the liability. Already 285 there in the liability. One more liability is now added with that. So which is 35. 320. It becomes 320. Rest of the other account remains the same. So capital is 850, plant and machinery 300, bank 500, furniture 100. No other changes. No other changes. What is the total of both the side to verify? 850 plus 320. The total could be 1170. Am I right? 1170. Is that clear? Come on, let me know this value. Is it correct or not? And in the asset side should also match 1170. Verify and let me know whether it is correct. 1170. Okay. Now, sixth transaction, goods amounting to rupees 45,000 sold for 60 on cash basis. We sold it for 60 on cash basis, means we will get the money, but costing only 45 means the stock will reduce only 45, but the cash increases by 60. 45,000 worth the stock reduced, but your cash balance increases by 60. So because of this operation, the difference between these two, 45 and 60, is your revenue. 15,000 should be owner's money, addable with the capital account. Is that okay? Now, sixth one. Capital should be added by 15 for the profit component 865, and 45 stock is reduced here. Already we have 165, from there 45 should be subtracted, so now it is 120. And the cash increases by 60. Already we have 105, with that 60 is added, the total being 165. Apart from these things, the other ledger accounts or accounts remains constant. So 865, capital being 865. Okay. Now what is the value? This value, liabilities 320, and then plant and machinery 300, bank 500, furniture 100. Okay, furniture 100. Now find out the total. Total in the liability side, 865 and 325 add, then this value being 1185. In the asset side, if you add up all these things, hope the value will be matching 1185. Clear? We will now move on to the seventh transaction. Goods costing 80 was sold for 125 on credit. Credit means the party's name will come debtors. Common name to the party from whom we have to receive the money is named as debtor. 80,000 rupees worth of goods sold for 1,25,000. It means 45,000 rupees we gained. That profit will be now addable with the owner's fund. Seventh one. Owner's fund is capital, increased by 45, 910 now. Stock is decreased by 80 because 80,000 rupees worth of stock is sold. Already we have a stock of 120. From there 80 is subtracted. Now it's 40. And it is sold to some party in credit. So the new term comes here. We have not received the money. So debtors comes here. The amount recoverable from debtor is 125. Leaving these three other ledger accounts remain same. So liabilities 320. Cash 165, and plant and machinery 300, bank 500, and furniture 100. Now add up the capital and liability, that total being 1230, 12 lakhs 30,000 rupees or 1230 thousands. And in the liability side the same way, if I sum that, this value being 1230, it is also matching. For each and every transaction after, verify whether it's matching or not. Of course, it's matching up to 7. Let's move on to the 8th one. In the 8th one, check issued to the supplier of goods worth rupees 35,000. Check issued to the supplier of goods worth rupees 35,000. Okay. Eighth one. So I have issued the check. Payment is made. So bank balance will decrease. Here the bank balance is 500. As I have issued a check for rupees 35, to that extent the bank balance will reduce. The value being 465 now after this payment. The payment is made to whom? Supplier of the goods. Supplier is nothing but the party from whom we have purchased the material. We have purchased the material but we have not paid the money, will be coming under or falling under liability. So the liability includes the supplier. Right, so we purchased in credit. For that, we have to pay the money. It remains pending. So as the money is pending, is a part of liability. And the lender now asking me, sir, what about the due, sir? Take this check. So I have paid a 35,000 rupees check to him. It means the amount payable to the lender being 320. Now I issued check 35 will reduce the 320 by 35. So after reducing this, the value being 285. Is that okay? Leaving that, other account remains same. So capital being 910, cash being 165, and stock being 40, plant and machinery 300, furniture 100, and debtors 125. We don't have any changes. If I add up this, the total being 1295. 1295. Okay. Liability side should match the asset side. The equation is still stands correct. Ninth transaction, check received from customer amounting to rupees 75,000. We have received the amount check from the customer. For the supplier, we have issued the check in a reverse case. We have purchased the material without making any payment. So we have sold the goods without any collection. Now that party makes a payment. Okay, the customer is a part of debtor. Customer is a part of debtor, right? Customer. I sold to somebody else. Right, that party has not paid the money. Then he is my debtor. So now that due is settled by issuing a check for rupees 75. 1295. Oh, 1195. 1195. So I just stand corrected. So the total being 1195. Okay. Yeah. Sorry. Now here the debtors issued a check rupees 75. I have to subtract that 75 from this value. 125 is the original amount, and he has issued a check rupees 75. After that, this balance is only 50. And check no, automatically it will have the impact in the bank balance. Already we have a bank balance of 465. Is now increased by that 50 rupees. After this increase, the value being how much? 75. No, you have to add 75 with this. So the value being 540. 75 is subtracted from the debtors and added with the capital. Leaving this, the other account remains the same. You don't disturb the other account. You just copy it down. 910, 285, 165, 40, and 300. Here 100. Ninth one. We'll now move on to the 10th one. Withdrawn by owner for personal use rupees 25,000. Withdrawn by owner for personal use. Owner is taking. I assume the money is withdrawn from the cash balance. I can subtract that cash here. 10th transaction. Here say after the 9th, what is the total? The total will not have any impact. 1195 remains the same because both adjustment happens in either one side, either asset side or liability side will not have any impact in the balance sheet. So here we don't have any impact in the accounting equations. Totals remain same. The 10th transaction here being cash withdrawn. So cash will be reduced by 25. Already we have 165. From there 25 is subtracted. Now the cash balance is 140. Who has taken this money? Whenever I use the word drawings for personal use, it is nothing but amount taken by the owner. Amount taken by the owner. Amount taken by the owner means it should be adjusted only in the capital account. So I have to subtract from the capital balance. The capital balance is already 910. From there 25 is subtracted. After subtracting, the balance is 885. Leaving that, other account remains same. So I just copy down the other values as it is without any additional adjustments here. Okay. Now finish up totaling the both the side in the liability side as well as in the asset side. The total being yes. How much is that? 1170. So 1170 is the total. 1170 is the total in both the side. Clear?